Do you realize that if you have a whole life insurance contract, you have a contractual guarantee to be able to access money through the loan provision? You see, with a policy loan, the insurance company gives you a loan from their general account and places a lien against the cash value that's accumulated within your whole life policy. Today, we're going to talk about how easy or hard is it to get your hands on the money through the policy loan. Hi, I'm Olivia Kirk.
I'm Tim Urich. We're from Tier 1 Capital, and we're here to show you how to regain control of your money.
So let's jump right into it. How would I go about getting a policy loan?
Well, basically, you could either call the agent or you can call the company. Either way, they're both there to serve you to get to basically take direction from you as to how much of a loan you're eligible for, how much of a loan you want, and then to process that loan.
So let's take a step back. How do policy loans differ from applying for a conventional loan?
Well, real simple. When you're applying for a conventional loan, let's say you're buying a piece of property or a house, the bank requires an appraisal. The bank's not in control of the appraisal process. They get a third party to tell them what the value of the property is. Based on the value of that property, they will loan some percentage of that property for a mortgage.
If you qualify.
If you qualify.
Right? So whether it's a conventional mortgage, a business line of credit, a credit card, you need to prove that you qualify, that you're credit worthy in order to access someone else's money.
Exactly.
Right?
And then you need the appraisal to come in at the value you need. In other words, let's say you're buying a $200,000 house, but the house only appraises for $190,000. Well, now you got some splaining to do. The bank is not going to loan $200,000 on a $195,000 property. That just ain't going to happen.
Right.
Okay? But again, somebody else is making that appraisal. Somebody else is saying the house is worth X. How a policy loan differs is the fact that the insurance company, the entity that you're asking to get a loan from, is also the same entity that is verifying the cash value.
Right.
So they don't, number one, there's less fees because they're the same entity. Mm-hmm. Number two, there's less left up to somebody else's discretion. It's a hard number that the insurance company sees as far as cash value.
And by the way, with the whole life policy, that number could only increase with time, right?
Exactly.
Because as these policies grow and mature, the cash value becomes more and more rich within the policies. And not only that, but the cash value growth becomes more and more rich, right? Because with the whole life policy, the insurance company is making two promises. The first promise is to pay that death benefit out if and when the insured dies anywhere along the way, as long as that policy is in force. And the second promise, which is really key here, is to have a cash value equal to the death benefit, right? So cash value, death benefit are equal at the age of maturity, which is typically age 121. So as that policy ages and matures, it grows, and it grows at an increasing speed because as time goes on, there's less time between your age and the age of maturity, right? So they have to stash more and more cash away each and every single year. So that's a key distinction with these policies, is that they're ever growing. And once that value is credited to the account, it can't go down. It could only go up.
Yeah, and that's a great point because think of it, let's look at the example where you're buying a house for $200,000 and it appraises at $220,000. The bank isn't going to loan you the $220,000, right? You only paid $200,000 for it, so they're not going to give you more than what you paid for it. But at the same time, the economic conditions in the country could change 5-10 years down the road. And the value of that house 10 years later could actually be $180,000.
We see that in Florida, don't we?
Well, we've seen it over
New
time.
Orleans.
Yeah,
The
exactly.
equity, the
Las
value of the
Vegas.
house could go down.
And it happens over various parts of the country at various times. The point is, we don't control any of that.
Nope.
But we do control, or we are in control of the ability to get a loan against our cash value in our life insurance policy. So how easy is it? Let's go back to that. It's a phone call. It's filling out a form, but you're not providing, you're not seeking permission. You don't have to show what your income is or pledge other assets. The asset's already there.
By the way, your credit score is also irrelevant. This is totally off the radar of the credit score. It's off the radar of a lot of things, right? Because it's a contract between you and the insurance company, two private entities, right?
Yep.
And you're the only ones involved in this transaction, right? Do you have the money available in your policy? Okay, I'll collateralize a loan against it and send this money to your checking account. That's how easy it is. Do you have the money or not?
And so let me give you a practical example. I had a client about a year ago call and said they needed to borrow $425,000. So they borrow the $425,000 against the cash value of their life insurance policies. And he said, well, I want one of those loans. I said, okay, here, I'm going to give you the 800 number. I said, normally we will process the loan for you. But I want you to call the company. I want you to see how easy this is. So I said, the only thing I would request of you is when the money hits your account, I want you to call me. So he said, okay. I gave him the phone number. I gave him the policy number. He called the company, got everything squared away. 3 days later, I get a call from him. He said, hey, Tim, I just wanted to let you know, I saw my checking account this morning, and there's $425,000 in there. I said, oh, that's great. He goes, I can't believe it. I said, I told you that's what's going to happen. He goes, I didn't believe you. He goes, I couldn't believe it was that simple. And it is that simple. So the point is, it's very easy to get a policy loan. You're not seeking approval and asking permission. You are giving an order.
Right.
That's not a small distinction. That's control. That's what our clients want.
Exactly. And now I guess I should disclaim, different insurance companies will have different processing times, different processes to get the policy loan. But either way, it's going to be easy. There's not going to be credit verification. There's not going to be qualification. In any case, it's going to be, do you have the cash value available in your policy for a loan? And where should I send the money? That is clear across the board. So if you'd like to learn more about this process, how to implement it in your life, how you could use it for your specific situation, visit our website at tier1capital.com. If you like this video, be sure to give us a thumbs up and don't forget to subscribe. Also, if you liked it, we picked out these two for you to watch next.
Thanks so much for watching our video. And remember, it is not how much money you make.
It's how much money you keep that really matters. We'll see you in the next one.